How do you think about your competitive moat?
Well, first of all, I think there are several things that are very different about us. The first thing is to remember that AI is not about a chip. AI is about an infrastructure. Today's computing is not build a chip and people come buy your chips, put it into a computer. That's really kind of 1990s. The way that computers are built today, if you look at our new Blackwell system, we designed 7 different types of chips to create the system. Blackwell is one of them. So the amazing thing is when you want to build this AI computer, people say words like supercluster, infrastructure, supercomputer, for good reasons. Because it's not a chip, it's not a computer per se. And so we're building entire data centers. By building the entire data center, if you just ever look at one of these superclusters, imagine the software that has to go into it to run it. All the software that's inside that computer is completely bespoke. Somebody has to go write that. So the person who designs the chip and the company that designs that supercomputer, that supercluster, and all the software that goes into it, it makes sense that it's the same company because it'll be more optimized, it'll be more performant, more energy efficient, more cost effective. And so that's the first thing. The second thing is AI is about algorithms, and we're really, really good at understanding what is the algorithm, what's the implication to the computing stack underneath, and how do I distribute this computation across millions of processors, run it for days on end, with the computer being as resilient as possible, achieving great energy efficiency, getting the job done as fast as possible, so on and so forth. And so we're really, really good at that. And then lastly, in the end, AI is computing. AI is software running on computers. And we know that the most important thing for computers is install base, having the same architecture across every cloud, across on-prem to cloud, and having the same architecture available, whether you're building it in the cloud in your own supercomputer or trying to run it in your car or some robot or some PC, that having that same identical architecture that runs all the same software is a big deal.
Yeah.
It's called install base. And so the discipline that we've had for the last 30 years has really led to today, and is the reason why the most obvious architecture to use if you were to start a company is to use NVIDIA's architecture, because we're in every cloud, we're anywhere you like to buy it, and whatever computer you pick up, so long as it says NVIDIA inside, you can take the software and run it.
The tech world is abuzz with a new wave, and it's not about software. In a spectacular shift, NVIDIA Corporation and Broadcom Incorporated are driving the next tech revolution by crafting the future on silicon. At the helm of this transformation is Howard Chan, the visionary behind Curve Investment Management, who exclusively revealed insights on how these chip makers are perfectly poised at the forefront of the burgeoning hardware sector. With tech valuations soaring and whispers of overheating in the NASDAQ 100, NVIDIA and Broadcom emerge as the powerhouses to watch, steering a future molded by artificial intelligence and robust industrial demands. Could these companies be leading us into a golden era of silicon mastery? Let's delve deeper. Welcome back, everyone, to Investocracy.
So I know that many investors in the audience are super focused on the data center market, and it would be interesting to kind of get your perspective, the company's perspective, on the medium and long-term, opportunity set. Obviously, your industry is enabling, your term, the next industrial revolution. What are the challenges the industry faces? Talk a little bit about how you view, the data center market as we sit here today.
These giant data centers are super inefficient because it's filled with air, and air is a lousy conductor of electricity. And so what we want to do is take that few, call it 50, 100, 200 megawatt data center, which is sprawling, and you densify it into a really, really small data center. And so if you look at one of our server racks, NVIDIA server racks look expensive, and it could be a couple of $1 million per rack, but it replaces thousands of nodes. The amazing thing is just the cables of connecting old general purpose computing systems cost more than replacing all of those and densifying into one rack.
As investors and market enthusiasts scramble to grasp the magic behind the tech giants, it's clear that hardware, not just software, is rapidly gaining prominence. Howard Chan puts it simply, chip makers like NVIDIA and Broadcom are not just participating in the AI surge, they are foundational to its very existence. Forget endless app updates, it's all about the chips. After all, without chips, AI algorithms are just impressive lines of code sitting idle. Chan's analysis indicates a booming demand-supply dynamic where these chip giants benefit from ongoing and potential future budget allocations, especially in sectors like cloud computing and AI infrastructure. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
The pace of innovation, our basic methodology is to take, because remember, we're building an infrastructure, there's seven different chips. Each chip's rhythm is probably at best 2 years. At best 2 years. We could give it a midlife kicker every year, but architecturally, if you're coming up with a new architecture every 2 years, you're running at the speed of light. Okay, you're running insanely fast. Now, we have 7 different chips, and they all contribute to the performance. And so we could innovate and bring a new AI cluster, a supercluster, to the market every single year that's better than the last generation because we have so many different pieces to work around. And so when Blackwell is 3 times the performance, for somebody who has a given amount of power, say 1 gigawatt, that's 3 times more revenues. That performance translates to throughput. That throughput translates to revenues. And so for somebody who has a gigawatt of power to use, you get 3 times the revenues.
The earnings per share growth for the NASDAQ 100 is slated at 21%, a considerable climb from last year's 15%. But the real question, can growth keep pace with its meteoric rise over the last 2 decades? Chan elucidates that while the tech sector confronts soaring interest rates, with balance sheets as robust as these tech titans, they have the cushioning others envy. The second quarter is flagged as crucial, marking potential EPS growth bottoms before bouncing back strong. NVIDIA and Broadcom are key players, weaving intricate layers of silicon gold in response to soaring demands. As Chan noted, the ability to meet demand just about shadows the industry's capability to supply. This golden edge situates them perfectly not only within the tech sphere, but paints a broader influence across diverse sectors. AI isn't just tech-centric anymore. Its effects ripple into biotech, construction, and beyond, as productivity jumps directly and indirectly across service sectors. Soon, non-tech arenas will find themselves harnessing AI's game-changing prowess, and NVIDIA and Broadcom are the harbingers charting this uncharted terrain. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Asia's supply chain, as you know, is really, really sprawling and interconnected. People think that when we say GPUs, because a long time ago, when I announced a new chip, a new generation of chips, I would hold up the chip. And so that was a new GPU. NVIDIA's new GPUs are 35,000 parts, weighs 80 pounds, consumes 10,000 amps. When you rack it up, it weighs 3,000 pounds. And so these GPUs are so complex, it's built like an electric car, components like an electric car. And so the ecosystem is really diverse and really interconnected in Asia. We try to design diversity and redundancy into every aspect wherever we can. And then the last part of it is to have enough intellectual property in our company. In the event that we have to shift from one fab to another, we have the ability to do it.
The landscape of stocks and tech is dynamic, with NVIDIA and Broadcom sitting strategically at the confluence of these changes, poised for monumental impacts. As we stand on the precipice of this silicon-driven revolution, investing in these chip makers translates to investing in the engines of innovation, dictating tomorrow's technology. Current valuations mirror optimism, with growth forecasts shining bright for both NVIDIA and Broadcom. laying the groundwork for exponential advances. Their track records in EPS and the demonstrated capacity to command supply chains set them at a vantage position in the highly competitive tech domain. For you, the discerning investor, the message is clear. The Silicon Surge is not a fleeting trend, but a substantial movement towards tech's very infrastructure. Will you ride this Silicon wave? As the tech titans solidify their claim, your thoughts and investment choices could align with a future defined by AI architecture. What are your takes on this exciting transformation led by NVIDIA and Broadcom? The floor is yours, and the world is watching. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.